Hello and welcome to today's session, Bold Engineering, Innovations in Law Firm Pricing Models. My name is Tim Batdorf and I'm the moderator and also the founder and CEO of a company called NextGenLPM. You may be more familiar with our old name, which is Legal Biz Dev. I'm honored to be here today with our distinguished panel, Michelle Weber, who is the Chief Operating Officer at Bilzin Sumberg, Keith Maziarek, who's the Director of Pricing and Legal Project Management at Katten Muchin Roseman, Shonette Gaston, who is the Chief Operating Officer at Robins Kaplan, and Fred Esposito, who is the Chief Operating Officer at Rivkin Radler. So let's jump right in. The first question for the panel is in two parts. Given all the changes over the past few months, what are clients wanting in terms of pricing? And how is your firm responding? Michelle, let's start with you.
Hi, thanks, Tim. Hello to everybody. We are a commercial firm in Miami, Florida, and we do a lot of public-private partnership work, CMBS work, and financial services litigation, among other areas. My firm has been working at LPM for about a decade. We were an early adopter. And in the interest of full disclosure, we are a client of Tim's. And we've spent a lot of resources on coaching, implementing LPM procedures and tools, and creating an environment that enables us to easily provide alternative pricing models. Having the data available to analyze the cost of a matter is critical to providing an alternative fee estimate that will be profitable as compared to the back of an envelope calculation. And the only way to have that data is to set up protocols like practice group task codes so that matters can be analyzed and budgets built. We implemented mandatory firm task codes across the firm probably 10 years ago, and matter budgeting tools have become sophisticated enough in the general marketplace to analyze historical data to predict a current fee. As a subset of this, the data you get when lawyers enter time and select task codes is far superior than when assistants enter time and choose task codes. So we have most of our lawyers entering their own time. And before a matter kicks off, the responsible partner meets with the team and communicates which task codes will be used for the various phases of a project. And this ensures we get quality data. So here we are 10 years out, and we have pretty good data to rely on when budgeting. So we do a lot of budgeting, and some of our practice groups, our public-private partnership group, as an example, has gotten so good at budgeting, we end up within pennies of our estimates usually. So getting to the point, when the pandemic hit, the biggest change for us was we went to daily time entry, knowing that we would need to manage our budgets even more diligently than prior to the pandemic, because our clients obviously were more focused on the predictability of what a budget brings them. So for us, the big impact of the pandemic was a much tighter review of budgets. We use a lot of alerts that go out at various budget thresholds. For example, 25% of the budget, 50% of the budget, et cetera. So as matters are progressing, there's a lot of review to ensure we're managing to our budgets. And our clients appreciate that because they didn't want any surprises, especially in this economy.
Thanks, Michelle. So the same questions to you, Keith. Given all the changes over the past few months, what are clients wanting in terms of pricing, and how is your firm responding?
Sure. I guess what I would say is that what they're wanting is very similar to what they wanted in the last the last recession, the Great Recession. That was kind of when I started in pricing. 2009 is when I started doing it. It wasn't even my formal job at that point. And what we saw back then was very, sort of parallel to what you're seeing now, but with a couple changes. So, as is expected, anytime there are, economic uncertainties or instability, any corporate entity is gonna seek, risk aversion, right, or risk mitigation. So a lot of that has to do with, applying certainty to what their budget items are. So, that was certainly the case in 2008, 2009, 2010. And what we've seen, during this we'll say turmoil. I don't want to say recession yet, even though I think that's pretty imminent, but not the same as the last one. Is we've seen that same sort of focus and emphasis on getting clarity and certainty around what spend is going to be. So a lot of the things Michelle talked about in terms of, I would say one of the themes that we've embraced a lot, and this is something that I came to Katten almost 3 years ago now, to build these functions and to help raise familiarity and adoption of what some of these methodologies are of leveraging data and how we can use that to be more sort of commercially responsible and responsive to what clients are asking for. So a lot of what we're doing, what we started doing is leveraging that data to teach the lawyers a lot more about what we've done in the past and how that can help us predict the future. And we've just seen sort of more of an emphasis on that, right? So greater concentration on those same principles of, all right, let's look at how we can use the data that we have in order to give the clients more certainty. A lot of that comes down to, and I hate to reiterate a lot of the things that were already said, but it's, a lot of the things that Bill said resonate, and I think are pretty universal. Being able to build budgets and sitting down with clients, which is one thing I would say is a little bit different now than 10 years ago or 12, is that clients are more willing to engage in a scoping conversation now. And that enables us as a firm to better organize our data, to better do projections and staff teams. So I'd say that has been sort of an evolutionary development now where I feel there's a lot more collaboration. And I'm always emphasizing with our partners and with our clients directly that, like, look, let's sit down and talk about how we can collaborate to discuss what your priorities are, what we think is going to happen, and how we can leverage each other's historical data and judgment and perspective to come to what are really sort of realistic budgets and realistic pricing models. So we can give you that certainty, we can give you that transparency, and it's all based on consensus and communication. So those are some of the main sort of themes that we see sort of repeating throughout kind of the way that the dialogue is progressing with our clients.
Okay, thank you. Shonette, how about what's happening at your firm?
So, Robins Kaplan is a litigation boutique, and we are seeing a lot of what Michelle and Keith just mentioned. Certainly predictability is requested and a lot of collaboration. But one of the things that we are also seeing, and we are really working hard to work as closely with our clients as possible, is they're asking for shared risk. We've seen a lot of that recently. So we are about 30% of our matters are shared risk, and it's flexible, right? So, some of these, the ability to share how we go to approach the market on these client fees and cases is new to some of our clients. But we're seeing more clients seek out those options beyond the hourly or fixed deal. So they want successful partnerships with clients. We want to have a successful partnership with our clients in the shared risk scenarios. So we draw from the experience that we've had, and we have cases designed in shared risk scenarios that allow us to really have a unique business, meet their unique business needs. And we've also worked with them so as their business needs shift, how we approach their cases shift, and so different outcomes can require different risk factors. So we're working really closely, but really it's exactly what Michelle and Keith mentioned earlier. It's the certainty and the flexibility.
Okay, thank you. And Fred, how about what's happening at your firm?
Well, I mean, to chime in the beginning and just say what everybody has said is accurate to a T, I want to add a little more to what Keith said. What we're going through right now is very similar to what we went through 12 years ago. So it's back then, everything came to a halt. I mean, credit dried up and commodity legal services were the big thing. And there was a real push towards the flat fees and the alternative fee arrangements because clients were now in the driver's seat. I don't think that has changed much. I do agree with my colleagues that, one of the concerns clients continue to have and will always have is the lack of predictability and overall legal spend. And they want it simple. They want it simple. I've had partners and people in the past who've done fee arrangements where, it's got to be on a full moon before we pay this or that and the other thing. And it gets a little crazy after that. But a couple of things I've noticed is not only are we back to where we were 12 years ago, And I think we went into it at that time quickly because everything was focused on data and historical data in terms of what we had in the hopper and what Michelle is doing and everyone is doing to address all those concerns about budgeting and risk, risk and sharing risk, having skin in the game. One of the things that I've managed to do, and just like Michelle did, we basically tightened up some of our internal processes and controls. For example, time entry was moved to once daily. And that has, of course, that in itself, keeping contemporaneous time is going to give you a boost in your WIP and your potential billables and so on. But what we've also done is I've taken it a step further. I'm looking back and I'm looking at the firm's processes. I'm looking at what we're doing, not only just the data and the empirical data in terms of what we're doing to produce legal work and to come up with the right spend or the right arrangement that works both for the client and the firm. I'm also looking at the behaviors and the processes that we use internally to produce that work and to see where we can make changes in processes and to apply project management tools to have a better result. For example, there's a lot of waste from where I look at in terms of how we service clients and when we're looking at different things that we can reduce our costs. Because I still think there's a mentality out there where people are thinking about rates and they're thinking about, potential rates, when it's really about what it's costing you to produce the work. And I think the economics, while they're extremely important, I don't know what my colleague's opinion is, but in my experience, I find that some firms are not really in tune with all of their economics to the point where they need to be to really propose an arrangement that works for the client. But what I look at is some of the waste. I mean, missing filing deadlines, incomplete forms, bad drafting, data entry errors, overproduction, starting work before clearing conflicts, okay? Things of that nature, non-utilized talent, excess capacity, not leveraging. These are all examples that if you were to quantify them into cost of what it's costing the firm to produce that work, that has a definite impact on the bottom line and also on the pricing that you propose. So while I'm looking at it the same way my colleagues are, we're also looking at how we're doing things. And we're making quick fixes as we go. We're also doing a very thorough review of our client intake protocol at the moment, because we believe there's a lot of time that gets wasted there among lawyer time as well as production and getting work out the door. So we're doing everything that everybody else is doing. We're responding to clients' needs and issues by coming up with business models that are more closely aligned with the client and the economic interests of the client. But while at the same time getting attorneys to realize that there may be simpler ways of doing things and we can eliminate some of those waste and we can create an incentive for attorneys to reduce the cost to produce the work instead of increasing it. And I have found that over the last few months since we've gone into this kind of a rapid fire deal, I think back to Keith's point, the fact that we all had this experience 12 years ago, I think made it a little easier for us to transition into this role again. Mm-hmm. But I think there's new twists to it than there were 12 years ago.